Warm welcome everyone to a new learning video series, especially for traders. So, today's topic in this series will be breakout trading. So, if you have still not watched the previous videos of process to read candlestick charts, the link is available in the description. So, let's start. What is breakout trading? Really, breakout trading has different categories. So there are different time frame or different ways breakout trading generally works. So I've just separated into four different parts: one, two, three, and four. Okay, these are the major general patterns which get develops in a breakout trading. So what happens in a first pattern is price is in a tight range, tight sideways auction, and price either breaks towards upside or towards downside, and it will start moving in the same direction of the breakout without even providing much pullback or much trading opportunities if you are late in this while taking a trade entry. Same way, the second option, where which again same price is in a sideways mode, and once price makes a breakout, it provides a small pullback and price rejects from this point. So this is where price is getting a rejection. Price is getting a rejection and we are also getting a pullback. So we get a chance if we miss to take a trade during this breakout, we are again getting a chance in form of a pullback and a immediate price rejection. So next is price is again in a sideways balanced auction. Same, once breakout happens, this time price started finding an acceptance above the balanced range, finds an acceptance above the balanced range, and then the ultimate upside move, because price has made a breakout towards upside and finds an acceptance, then price makes the real ultimate move towards upside. And fourth different perspective where which breakout takes place is price is in a balanced mode, but remember this is the low, we are getting an higher low formation, series of higher low formation, and then we get a clear breakout. The same pattern works also for a downside momentum also. Okay, what happens is in a downside move, so this is the high, we get a lower high formation, lower high, continuous series of lower high formation, and then a real breakout on the direction towards downside. So generally, how, let's look at the in form of a candlestick chart. So price is in a balanced sideways mode, and then when price makes a breakout, we are getting an acceptance, and then the real down move comes into the auction. So same way, there are stages to approach in a breakout trading. Blindly following every single breakout will not work in every stocks or at every point of trading. So there are different stages. So first stage is before breakout happens, what are all we need to look and how we need to look at the price auction. Okay, next stage is after a breakout. Once breakout has taken place, there is two possibilities: the breakout can be a successful or it can be a failure. Okay, failure breakout tends to trigger your stop loss. Successful breakout, based on your trade execution, it provides as a good reward. And third is the location of breakout. Just because price is in a sideways mode and we are getting a, either let's assume we are getting a breakout on upside, this doesn't mean this is a strong upside breakout, we need to blindly take a buy side trade? Definitely no. Location plays a very important role, because in a downtrending market, if we are getting a breakout towards upside, this breakout, there is better chance it can end up being a failure, because the ultimate trend is towards downside, and we are getting an upside breakout after a sideways balanced auction. So in a trend plays a major role, and location of the breakout is very important. In a downtrending auction, getting an upside breakout and just blindly taking a buy side trade with against going against the trend is not a good trading decision. Same way, next the fourth one is time frame of the breakout. Time frame has different category based on your trading style. Daytime, daily time frame chart, or breakout developing in a monthly time frame chart, or breakout getting developed in a weekly time frame chart. These are a kind of a high time frame charts. Same way, there are lower time frames, like in an hourly chart we are getting a breakout, or in a 30-minute charts we are getting a breakout, or it can be 15-minute, same way 5-minute. Okay, all these are the lower time frame breakout. So it is now decision has to be made from us, what is our trading style. Whether we are a positional swing trader, or we are an intraday trader, or a scalper. Generally, scalper or an pure intraday trader focus more on a shorter or a smaller time frame breakouts, whereas higher time frame breakouts like a positional swing or a kind of a long-term investors more focus on a higher time frame or a bigger time frame like a daily, monthly, and weekly. In some cases, if there is no greater confirmation, if you are an intraday trader, for a bigger picture, we move traders can move and go and look at higher time frame trend also. Same way, next is the follow through of the breakout. Generally, breakout is visible to every most traders. If you open a chart and you start analyzing, once balanced auction gets developed, we get a breakout towards upside. Let's assume an upside breakout is getting developed, so this is visible to everyone. Okay, the traders who open a same stock, let's assume this breakout comes in an HDFC stock, HDFC finance, we are getting a breakout. Now any trader who opens a daily, let's assume a daily time frame breakout, any traders who opens a daily time frame breakout chart and looks the breakout, it is clear it is in the upside direction. Now this is where follow through plays an important role, how strong the follow through is getting developed. So the next, the sixth is the breakout failure. The breakout failure is one which triggers your stop loss easily, because in the same case, let's assume we are getting an HDFC finance, we are getting an upside breakout, but there was no further upside follow through and price reverses back. This is where breakout fails, and the breakout ends up being a failure, and the stop losses, if you have taken a buy side trade just because of seeing a breakout without even looking beyond the trend and many other parameters, blind taking any breakouts always doesn't works. Same way, so how and what are all the stages where which we need to look for a get benefited of a breakout? There is nothing called 100% breakout will get success. Okay, we can filter and make sure maximum times our breakout trades works and we get a reward rather than triggering a stop losses. So first of all, look at this mini flow chart here. First, before breakout, as I mentioned, there are stages before breakout and after breakout. So first let's look at before breakout, what are all the stages we need to look, and let's look at few examples how to look at before breakout in any stock or index. So first of all, very important is the time frame. It is up to your trading style. Time frame depends. It can be daily, monthly, weekly. It can be hourly time frame, 15 minute, 5 minute or 30 minute. It is now your time frame of looking a stock is very important. Once you confirm your time frame, let's assume you are looking a daily time frame chart and you are finding a breakout. Now the next important is the location of breakout. In a downtrending market, if breakouts happens on towards upside, this is completely against the trend, okay, against the bigger picture of the market or any stock. So location plays an important role. Same way, in an uptrending auction, we are getting a balanced momentum, balanced sideways auction, and then price making a breakout towards upside. So already the trend is on towards upside and we are getting a breakout towards upside. So location is favoring, okay. I'm not telling in an uptrending market every breakout works. So for that only we have different set of parameters which I have created in this mini flow chart. So the trend is up, the location is favoring us because the trend is up. We are getting an upside breakout, location is favoring. Next we need to look at the price action which is getting developed. That means in a breakout, before breakout develops, in this sideways momentum or a sideways balanced auction, what price action is getting developed inside this tight range will be very important. Because once, let's assume the price action is not in much favor of buyers but still breakout happens towards upside, so this is where more failure breakouts makes the stop losses to get triggered and price reverses back. So price action in this balanced range will definitely play a important role. Next, moving on, after price action, next is the context or a trend. What is the trend before price making a breakout? And next is the volume flow. Volume flow generally means when the price action, we are looking at this price action before the breakout, the sideways price action, we need to also look at the volume flow in this sideways price action. And next is the candle pattern. When we gonna look at the candle pattern is whenever the higher and the lower range is getting, when price is testing this higher and the lower range of this balanced sideways auction, the candle pattern will play an important role. Okay, I will show you in the with the help of candlestick chart, but just follow this flow chart. And next is your trading style. So when I say trading style, it is up to you whether you are a positional, you are a swing trader, or you are a long-term investor, or a short-term trader, or an intraday trader. Okay, and last but not the least, major important is the trade execution. If you follow all this till time frame, from time frame till trading style, everything you are clear. But if you fail to execute the trades, end of the day we gonna not make any single money. Trade execution is the very important asset. So moving on, let's take the first example. This is an daily time frame chart. A daily time frame chart comes under a category of higher time frame. So first let's take an example of an higher time frame daily chart. The stock which I have chosen here is a Tata Steel, and we are getting a sideways balanced auction development in the stock. Now very important, once first we know the time frame, next we need to look at the location. Completely we are discussing about before breakout. Okay, there is a separate section where which we will discuss what we need to look at after a breakout, but during breakout and after breakout. So now let's focus on the before breakout part. Let me go back to the same flow chart. First, in this Tata Steel stock, we have confirmed the time frame, that is daily. Now we need to look at the location where which this balanced auction is getting developed. So the same breakout, I have just minimized this chart. I have zoomed out this chart. So look at the location. This is the same balanced auction which I have shown in the previous slide. So now the breakout balanced auction, before breakout, the balanced auction is getting developed in the same zone from which sellers have dominated and pushed the stock price quickly towards downside. So again, remember, it is in the seller zone and we are getting a balanced auction development. Okay, now the location is clear, it is in the seller's zone. Same, moving back to the flow chart again. Now we need to look at two different parameters. One is the price action in the balanced auction, and next is the trend of the stock during the balanced auction. So broader trend. What is the broader trend? After this was a down clean move, but later on buyers have also pushed the price towards upside. So when this balanced auction getting developed, the trend is towards upside. Trend is towards upside and it is in the sellers earlier seller zone from which the sellers have pushed the price towards downside, but at current point the trend is towards upside. Okay, so moving back again, now let's look at this price action part. Let me show in a zoom in light slide zoom in chart here. So what is the price action getting developed? So in this complete balanced auction, let me include price action along with the volume flow. Generally, whenever this balanced auction gets developed, volumes will be low when compared to the relative volume. The volumes will be low. So generally, what is happening here is the volume broadly it is not showing any major spike like the volumes which is relatively, and there is not much high volumes, that is very obvious. So now at this point, what is the price action getting developed? Buyers are trying to push the price towards upside, but somehow if we closely monitor this precise zone, what is happening is buyers are trying to push the stock price towards upside, but sellers are again trying to push the stock price towards downside, and one more time buyers trying to push again towards upside, and sellers are again coming and pushing trying to push the stock price towards downside. At this point we are getting multiple attempts from the buyers and from the sellers, again from the buyers and again from the sellers, but all these attempts are with volumes are low. There is no great volumes, so there is no much expectation straightforward either from buyers or from sellers. So price action is clearly telling us multiple attempt made from buyers and sellers both are failing, because at this point buyers are making an attempt, price is not moving up, and at this point sellers are making an attempt, price is moving down, but again a rejection is coming in. So no clear attempt before breakout. So very obvious that either buyers nor sellers both are not strong, showing any kind of clear strength in this balanced auction. General basic logic, why price goes into a balanced mode? This is a basic logic why price goes into a balanced mode. Very simple. From lower levels, buyers trying to come in into the auction, and from higher levels, sellers try to come into the auction. Ultimately, when price makes a breakout and gives us a follow through, that is where the real strength comes to limelight. That is, in this case, in this example, sellers have shown their strength, price made a breakout and price moved towards downside. But let's focus now more on before breakout. In the upcoming uh, slides we'll discuss about after breakout also. Okay, so trend remember, in this case the trend is up, but breakout is coming towards downside. Trend is up, breakout is coming towards downside, and when breakout, this is the breakout candle, and look at the volumes are not much stronger when compared to the previous relative volumes. And very important here is, we are look at the candle formation. Once price makes a breakout towards downside, immediately next candle price is reversing back towards upside. Why this is getting is, first of all, the breakout candle has not had a huge volume breakout. And second for important is, the when price is making a breakout, price is reapproaching the same zone where buyers have pushed the price towards upside. So it is very obvious the buyers will again come in, because the volumes are not stronger when price is making a breakout towards downside. And now let's closely look at here again. Look at the candle which is getting developed here. The candle formation, this is kind of a clean bullish candle with which we are having a tail, a kind of a tail, or we can call it as a wick, and clearly price is closing near day's high of the candle, and the time frame is already daily. Immediately once price making a breakout, next candle, we are getting a bullish candle with a tail. Generally tail formation with price closing near day's high tells us it is a kind of a bullish candle. But remember, still trend is towards upside, and breakout is happened has happened towards downside. Completely the breakout has taken place against the trend, and immediately buyers are pushing price towards upside. Very important here is whether now, because ultimately this was the first attempt from the buyers, second attempt from the buyers, both the attempt failed. In both the attempt buyers didn't dominate. So for the third time when buyers are again coming in, whether we are getting a follow through and price is crossing, whether price is crossing this higher zone of this balanced auction is very important. But what is happening here is, price is not even, buyers are not even interested to move price up. Immediately on the next candle price again came down. Okay, price again came down. Now let me go back and show you the pattern of breakout. There are different patterns. So in this case we are getting, in this example we are getting this pattern 3. Once price is making a breakout, we are getting a sideways acceptance and then the momentum. So this is upside example, same getting applied. Here is the downside example. Okay, let me show you with a zoom in manner here. So look at this. Price making a breakout, again buyers attempt, still sellers again came in, and next for the next 4 to 5 trading session again price is in a balanced auction. But remember here, it is below the sideways range. The acceptance we are getting here is below the sideways range, and from this point very important is, this zone where which we are getting an acceptance below this range will be very important for the sellers. And look at the candle pattern which is getting developed, not even single bullish candle, and at every higher levels if you look at the candle, price is somehow getting a rejection. Price is trying to move up and getting a rejection, trying to move up again getting a rejection. So ultimately in this balanced auction, below this sideways range from which we have got a breakout, so this entire range which the balanced auction which is getting developed, below this we need, this is where sellers will start dominating the auction. So what is happening here is, ultimately price is moving towards downside, and remember one more thing again, the trend is up. So this breakout is against the trend. So don't expect major or a bigger move. Okay, don't expect bigger move, because whenever price is moving towards downside, it is again retesting the buyer zone from which buyers have pushed the price towards upside. And look at this, from what point the price is getting a pause. So now at some extent price is getting a pause here, that is, this is the zone, and the price from this point it has moved cleanly towards upside. Again, when price reapproaching the same zone, now look at the volume flow which is getting developed after this balanced auction. When price started moving towards downside, the volumes slightly slowly increased, and a sudden drop in the volumes when continuously price is moving towards downside, we are getting a drop in the volumes at location. Now is very important. Drop in the volume in the location of the buyer zone from which price has moved towards upside. So already the trend is on towards upside, we are getting a downside breakout. Still price has moved down from 412 levels to almost 350, that is probably a 60 points in a 400 plus rupees of stock. Price has moved down a kind of more than 12% move towards downside, but ultimately the trend was up. There is every possibilities whenever price is reapproaching the buyer zone, they can definitely come in and push the price towards upside. Okay, so let's move on and look at one more example, this time in a lower time frame. That is, so this is the HDFC finance, and the time frame here is the hourly time frame. Okay, and in this hourly time frame, so I have marked the range, the sideways range, which was probably almost, even in this hourly time frame, it was more than 2 weeks. Price was in this entire sideways range. Before making a breakout here, price was in a sideways for the past 2 weeks before breakout has taken place. Now let's focus. This is hourly time frame. Again, to look at the trend, we gonna again move back and check the charts with zoom out mode. What is the trend? So clearly here, look at this. This is the balance we are discussing. The zoomed in chart which I have shown is this balance, and before that the trend is clearly towards upside. Price is cleanly moving towards upside. So broader trend in same in an hourly time frame. Once you are choosing a time frame, first look at the trend on the same time frame. So same, I'm looking the trend in a same hourly time frame. So now let's go back to the same for flow mini flow chart which I have created. First choose the time frame. So now we are choosing here is the hourly time frame, 1 hour time frame. Now location is very important, and trend. The trend is on towards upside. Now we need to look at the price action which is getting developed in the inside balanced range, and next is the volume flow, candlesticks pattern, and the trade execution. Okay, so trend is towards upside, very clear. And in this balanced auction, first attempt from the buyers failed, no further follow through, price reversed back, and even sellers failed. Okay, and at this point, look at this candle which is getting developed here is very important. Price is moving below this range, but remember what we are getting here again is the bullish candle with which we are getting a tail, and price closing near the eye of the candle in an hourly time frame. Again bullish. This tells us, sorry, so this tells us clearly that still buyers are coming in from the lower levels. The basic logic behind this, why price goes into a balanced mode, is very obvious. Buyers coming in from lower levels and sellers coming in from higher levels creates the balanced auction. Whoever wins this, dominates this auction, makes a breakout and then develops the follow through. So same from lower levels, again buyers are coming in and price is moving towards upside. Now look at the volume flow here. After buyers push the price towards upside with decent volume when compared to the relative volume, next again there is a volume drop, and now slowly when price moving further upside inside this balanced range, volumes are increasing, price increases, volume increases, but when this was the first attempt where which sellers came in and price again crossed, again sellers are coming in. How to identify it? Very simple. Look at this candle which is getting developed here. The wick is getting formed now from the higher levels. That is, again same pressure is coming from the sellers. Who are those sellers? The same sellers who have ultimately came in for the first time, they are again coming in. And look at this, they are again coming in. They are not letting the price to move up. Now volumes were increasing, and again when price went into a sideways mode inside the balance, again volumes were low. Okay, so now still buyers are not dominating the auction, but now what is the further auction development? Sellers when again trying to move towards our downside, this time buyers have not left the sellers to come till this lower zone. Buyers started coming in from this point. This is where we need to look is the higher, this is the low, and this range is the higher low formation. Generally in an uptrending move, higher lows and higher highs, whenever the continuous series of higher lows and higher high develops, this tells us the broader stock is in a strong uptrending move. Same way here we are getting a low and this is the higher low formation. So from this point one information is clear: sellers are coming in from higher levels, but buyers are shifting their interest towards upside and they are started coming in from this point itself. They are not allowing the sellers to come near this lower zone again. Okay, again price went into a sideways mode, and this time when again buyers push the price towards upside, look at the volumes. The price is moving towards upside, volumes gradually started increasing. And now remember, when this breakout has taken place here, let me zoom in and show you. When this breakout has taken place, this time look at the volumes. This is the volume bar. When we compare relatively, the volumes are decent enough, and this time when price makes a breakout, it started moving further up and it continuously price moved up. So in the upcoming videos I will show you how to look at after breakout, what are all the parameters we need to look at after breakout. So this session is completely focused on before breakout. So the higher low formation which is getting developed, giving an immediate end in this balanced auction, that somehow buyers are shifting their interest from this point. They are shifting their interest to push price towards upside. The shift in the interest from the buyers gives us an hint that this auction, the price action getting developed inside this balance, is somehow buyers are showing more interest when compared to the sellers.